Success is simply a matter of luck. Ask any failure. Earl Wilson. My friends, each and every day our success comes from being in the market, learning by doing, and again, every day. 10 to 15 minutes, that's all we ask. It's not 4 hours on Saturday. And if you start trying to do 2, 3, 4 hours a day, it'll never work. Just a little bit each and every day, chipping away. You move a mountain one pail at a time, one bucket, one shovel full. Let's jump into these charts. This is a day where everything is down. Now look how the week is shaping up with the S&P. We've gone into the second day of down moves. We've completed the transition on the half-day chart. And you can see where we've had average volume, for many days now. And we are now completely through the weekly trend line on the half-day chart. The 2-day, it is sitting right there on it with the wick below it. And of course, this is the first day of the latest 2-day candle. We've got decent volume. As we look at the weekly, we've got 2 days left in this week, and we are already getting close to average volume, and we have a doji there. Lots of indecision, down 0.48% today. If you look at our trade execution summary grid, Patreon members, of course, it's already been emailed to you. It's one of the first things I try to do at the close of the market, get out to you before I even do this show. It's in your mailbox, email, and if for some reason you're traveling, you don't see it, it's going to your spam, don't worry about it. You can go to the Patreon page too, but do check if you're not seeing it each and every day. You'll see the percentage, which has gone up from yesterday. And yes, we are looking at some bearishness now. It's more than a coin toss. It's getting better. We're going to wait till the end of the week before we call it, because we've had a few false starts already. Hell, we had 2 weeks. We had 2 dojis starting on the week beginning November 3rd, November 10, and then with lots of volume, we had a down move back in mid-November, but the market reversed from the down move and headed up. Then we had a red candle 2 weeks ago, that is January 20, and then a green candle last week. Maybe this market's finally coming to an end. Don't know yet. We're continuing to watch with bated breath, ready to pull the trigger on a down move. What about the NASDAQ? It's down even more, 1.75%. You can see how much bearishness we see. I mean, really hammering down. Look at all the volume. Over the last 2 days with the down moves, we have a red down candle right there, both penetrating and below the weekly trend line. It is a red spinning top. You can see the strong red down candle on the 2-day pushing through. And of course, this morning and afternoon, we're below the weekly trend line on the NASDAQ. So again, we're getting into that territory where it could be rolling over. Not calling it yet. Again, look back in November the 10th and the 17th, those weeks beginning then, looked like the market was rolling over hard and then turned right around. So we're being cautious, but optimistic in the potentiality of taking a bearish position on the S&P and or NASDAQ 100. You might say, Tom, how do you do that? Well, one way you can practice it. We're not a stock calling service. We're an education firm. SH is the single inverse of the S&P 500. PSQ, and there are other funds too, is the single inverse of the NASDAQ 100. Those are possibilities. If you guys remember, last year in late February, we had a nice run-up in PSQ on the NASDAQ. Also, you can see where we had that nice run-up again in late February up through early April. We had a nice run-up also on SH. That means the market was hammering down and we were riding it up. So again, there are possibilities, just a fun way for you to jump in when things look and are bad. There are possibilities. Of course, if you've taken our 3-part series, Options Made Simple, the Charting Wealth Way, you can do it with options. Put options on the S&P and on the NASDAQ are also possibilities. What's going on with TLT? Oh, and by the way, I will put at the end of today's show, I will place inverse funds, how to make money when markets crash. That's a great training we have for you to practice. Inverse funds are not for everybody. There are problems with them. They're not perfect. They have higher fees. They recalculate on a daily basis. They can magnify your losses. They can also be a way to ride the market down. So I just want you to listen to that and, of course, give you some other food for thought. Now, let's look at 20-year U.S. government bonds down a little bit for the day, 0.25%. And, of course, we're going into our third down candle on the 2-day chart. You can see where things peaked back on the 26th in the morning, 26th of January. And but for one green up candle since then, bonds have been moving down. We don't have a way to draw a trend line yet because we can't connect to anything. I've just gone back to these two spinning tops from back several weeks ago. I got nothing for you. Although, we last week had a green up candle, the week before a red spinning top, the week before that a green up candle. It's hard to call anything, but it does look bearish. Now, let's move on to gold. Gold is the least of the downs today, 0.70%. Of course, we had up moves yesterday. We can see where things ranged up in the morning. It looks like, according to these Heikin-Ashi candlesticks, and pulling back in the afternoon, almost flat. After those two big down days, Friday and Monday. So we are below the weekly trend line on the half day. We're below it with a doji first day of the latest 2-day candle on the 2-day. And of course, we're just below it, pinching it a little bit with that red spinning top. We're already almost up to, up to average volume on the weekly chart. And again, where are things? Please read the article I wrote over the weekend, shared with everybody. You can find it at the website, chartingwealth.com. You'll see it. It's there under trainings. It's the latest training that I put up. And it explains to you conventional view, conspiracy, alternative view, and then a synthesis and logically what's actually going on. And you will find that there's still a great deal of bullishness left in these up moves on precious metals, including silver and gold. But as we tell you there, as I read to you yesterday directly from the work that I did over the weekend, we will continue to see now that things have sort of started adjusting out. There's going to be a lot of volatility. So if you're going to be looking at jumping into gold, silver, some of the other precious metals that have really been ranging around, you can expect more of that volatility. I encourage you to practice trade it. Again, we're not a stock calling service, not a bond, gold, Bitcoin calling service. We're an education firm. We want you to practice trade with us. We don't get paid to give advice. We're not giving advice. Let's move on to HODL. It just continues to pull back 3.94%. I've heard some folks talking bad about Bitcoin, how it's just spiraling. We've heard all that before. Bitcoin seems to always recover at some point. Will it always? I don't know. I don't know if technology is going to pass it by or not. I know you got people who've drunk the Bitcoin Kool-Aid that believe it's the best thing ever and it is the hope for the future. And then, of course, I know people who think it is one big con. I don't really care either way. If I can trade it as I have in the past, I'll do it. I will. I don't care if it's a commodity, if it's a stock, if it's an ETF, whatever it is. If I can track it and I can trade it, I'm going to trade it. But that's just me. That's not necessarily you. I don't really care how anybody comes down. If it has a value and I can see it move and can understand the movement after having practiced it for many months or years, and then I can jump in at the right time and trade it, I'm going to do that. But that's all just my choice. But we do see Bitcoin continuing to pull back. Look at all this volume on the weekly chart. Look at that big red down candle. You can see where our last green up move was back on Wednesday morning and afternoon, the 28th of January. And since then, it is just like a tumbling stair step, heading down with all that volume. You can just see it. Again, it's brutal. It's not pretty. We were hoping we were finding a base somewhere in here. Well, that was penetrated last week and even more so this week. And didn't I tell you, if we break through this low, I kept saying, look at this low, watch this low. If we penetrate it, we've broken the floor, and we have gone into the basement. And how deep has the basement been dug? I can't tell you, but it is bearish. That is where we are, my friends. God bless. All the best from the whole team at Charting Wealth. Be sure to take a look at the end screen for our training on inverse funds, how to make money when markets crash. God bless. All the best from Charting Wealth.